Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. Today, I'm very excited for a special guest, Taylor Zork, CPA and co-founder of the CryptoCFOs, a community for tax professionals, accountants, finance professionals, and beyond that are dealing in the world of Web3. Taylor, thanks for joining me here today.
Thanks so much for having me, Patrick. It's a pleasure to be here.
Absolutely. I'm looking forward to getting into this conversation. To get started, why don't you just give us a brief background on yourself, your company, and how you found yourself in Web3?
So myself, I started in accounting. I got my MBA at Bentley University and went straight to public accounting. And I was with a big four firm. I got some great experience, but really just didn't like that lifestyle. So kind of found my way into different industries because I was like, okay, I don't like this. Maybe I'll like this, and made my way to Burton snowboards. And then eventually I kind of just took a while to just travel and figure out my own life with my wife. And during that process, I ended up in Guatemala teaching a circus artist residency with my wife, teaching acro yoga. And
Wow.
there I met a guy who was deep into the crypto space. And this was back in 2017, like end of 2017 into early 18. And I had heard about Bitcoin while I was at PwC in my early career back in 2013, but I didn't have money to invest, and I really didn't make that epiphany moment until I learned about Ethereum and smart contracts and stuff like that. And that really made things click for me. And I was like, wow, this is going to upend the financial system. So I started looking for people who are doing work in the space, and it was really hard to find tax and accounting people. So I just started working with startups myself. So that's how I got involved in the industry. And then after joining a startup back in the summer of 2020, so DeFi summer, called TrustSwap, after about a year contract with them, I left and decided I wanted to start my own company educating accounting and tax pros, because while I was at TrustSwap, I could not find anyone to help me. So I was doing everything in the stack from bookkeeping all the way up to quarterly financials, simply because I couldn't find anyone to help me with the work. And then if I could find people, they would say they're trained, but they didn't really understand things deeply. So that led me to team up with my business partners, Brian and Brandon, who started a similar community in the cannabis space. And from there, we wrote a book and started the CCFOs community. We're a year in, and feeling really proud of what we've built so far.
Yeah, definitely. So we both experienced the fact that, there aren't a lot of professionals in this space with a deep level of experience that can provide value and the services that are required, whether it's to Web3 companies or even to individual investors with complex portfolios. So what are some of the bigger challenges that you see, because I know you're dealing with educating a lot, what are some of the challenges you see with CPAs and CFOs in starting to learn about digital assets and starting to build enough of a knowledge base to where they can actually add value to a client or to a company?
I think that the biggest challenge is in some of the jargon that we use, right? Because ultimately it's the cryptocurrency space, right? Cryptographic. People think that because it's cryptography, it's going to be it's almost mystified in people's minds, and it's at this level of where they just I spoke with my my cousin a couple of years back, and he's in finance, high finance at TD Bank. And he was saying oh, I'm not even going to try to, it's beyond my understanding. I'm a dinosaur. He was 45 years old. He's I'm not going to be able to learn that stuff. It's too much. And I think that it's overcoming that thought process that it's too complicated for you to learn. Ultimately, all we're doing when we're doing crypto, tax, and accounting is, at this point, until we have regulatory certainty, we're tying it back to traditional assets that they resemble. And we're using our common sense to think about accounting treatments that make sense for that. So that's one of the things. And then also trying to rely on legacy systems 1099s are a really great source of information for a lot of CPAs for, non-employment compensation and 1099 MISCs. But ultimately, those same tools for crypto don't provide the same quality of information, because there's a lot of missing data behind that. So I think that relying on old systems that seem like they're really great data sources that aren't necessarily for the crypto industry, and then overcomplicating things by kind of getting in your own head about the cryptographic aspect of the crypto industry.
Exactly. Even for someone experienced like me or yourself, this industry is moving at such a fast pace. We may be dealing with a new protocol or new type of transaction in this coming year. So you really need to have a high skill level in terms of being able to research tax issues and, like you said, relate them back to the current tax structure. So you need to understand tax regulations, and you also need to understand whatever the specific type of protocol or asset or company is that you're dealing with. So then you can relate these two. And obviously documentation, I believe, goes far away as well, because when we're dealing with these ambiguous tax scenarios, you want to make sure you're contemporaneously documenting everything as well. So I think those are great points. So up to this point, we've sort of seen not too much like Web 3 to Web 2 crossover, but I really believe that, the next stage and iteration of this over the next years is we're going to start to see a lot of, Web 3 bleeding into Web 2 or vice versa, sort of depending on how you look at it. So do you think that more traditional CPA firms and just more traditional CPAs are going to basically, be forced to start to get up to speed on some of these things if they start to see more traditional clients or more traditional companies start to adopt crypto? Like we've even seen GoDaddy recently integrate the ENS into their system. So we're starting to see this, Web3 sort of being its own thing that's going to start shifting in the future, I think. So do you think that there's going to be a lot of traditional accountants that are sort of, forced to upskill and learn this? And do you think they're prepared, or do you have any tips for them, I guess?
I would say absolutely. I think that we're experiencing kind of what happened with the, advent of the internet and when that was getting adopted. I think that, people specialized as internet accountants. And I think that was like a whole skill set that and if you heard someone call themselves an internet accountant today, you'd be like, what the hell are you talking about?
Yeah.
That's just, everyone is an internet accountant now. So I started, you were on my podcast. Niche to Necessity is the podcast that I started that basically addresses this whole thing. It's like, we're going to be all needing to use blockchain, whether you know it's blockchain as blockchain or whether you're just interacting with it and not really realizing it. I think we're going to start to see more of that. You see companies like Starbucks having rewards programs on Polygon and things that the end user may not even know that they're interacting with blockchains or cryptocurrency. So I think that it's going to be ubiquitous. I think I'm in this industry because I think it's going to transform the financial system, as I know you probably are as well. And so I think people are crypto CPAs now, but I think everyone's going to be a crypto CPA. So I think it's almost going to be redundant calling yourself that in 10 years. It's necessary now because there's a lack for sure. But and I think that the people who are kind of resistant to this tax season, I think, will open up their eyes, and especially next tax season as well as we enter another bull run, because we're seeing more adoption. We're seeing the ETF approval. We're seeing every day, boomers who may not have been involved or may have been kind of turned off by the, taking custody of their own assets can now have exposure to Bitcoin without having to really do anything or take custody or take any initiative there. So I think we're going to see a lot more adoption, and as a result, CPA firms are going to see this opportunity for additional revenue, or keeping their clients and not having them go to someone else who can handle this stuff. Because if you tell your client, hey, I can't handle this, they might start to realize that you're not up to speed and you're not staying up to speed. And so, this is a large tax problem for a lot of people. And if you're not confident with your CPA being able to handle this, you should find a new CPA.
Yeah, definitely. Most new prospective clients that I see come to Camuso CPA are going to be a Web3 company or a digital asset investor that basically starts the conversation by saying, I ran this by my current CPA. They're completely clueless, so I need to switch everything over. So that is going to be, more and more common in the future. And I think firms are going to have to prepare for that. So if you were sitting down and speaking with a CPA or an accountant or a tax professional, and they have no Web3 or crypto exposure at all, like what would be maybe like the first couple steps that you would recommend for them to start wrapping their head around this space and getting up to speed, because there is a lot to take in, especially when you're walking into it now. Because someone like me or you that was involved in this, like 2016, 2017, 2018 timeframe, we've been able to sort of grow with this learning curve as the industry has grown. But now you're walking into 5, 6, 7 year learning curve. So there is a lot that has to be taken under consideration. So where do you think is the best starting point for someone like that?
I honestly think, and I think you'll hear a lot of people in the industry say this, that you need to get your hands dirty a little bit. And it doesn't I think people are afraid of doing that because, again, like we talked about with the cryptography, it's mystified. And I think that you need to tackle the problem head on in order to kind of take away that complexity. Because when you get into the tools and you start using, ETH or Bitcoin or Polygon or Arbitrum or whatever, or Binance Smart Chain, you're actually seeing the flow of funds, and it starts to make sense because ultimately this is an accounting tool. These are all accounting tools inherently. They're ledgers, right?
Yep.
So as an accountant,
technology.
Yeah, exactly. So you shouldn't be afraid of this as an accountant. You should see it as an amazing next step that makes your job easier. And I think that for people who are just getting started, you're not going to fully understand this if you put your head in a book. It's just, it's not, you need to be interacting with it. And so that's the whole reason I created the Trip Around the Cryptoverse, which, is our 3-hour CPE course. It lives in our community. And it's basically a hand holding. I will hold your hand from that process of on-ramping fiat on an exchange, setting up a non-custodial wallet. We do some DeFi transactions, and I made it complex on purpose. Because I want users to be able to go back and re-access the course to be able to really make this stuff make sense and go through the process on their own time, on their own. Because until you've double checked an address, a public key, or now, maybe you're using your .com or your ENS domain, but until you've triple checked those things, until you've sent or done a swap on a DEX and you've actually watched what happens and understood and looked at okay, here's the from. Oh, okay, why are all these other wallet addresses coming into play? Oh, okay, they're interacting with different liquidity pools. It's sending this asset to me. Oh, I can see that this asset ended up back in my account. So you can actually follow the flow of funds. And I think that process is where it really starts to stick in your mind, and it makes it so that it's okay, I can follow the process of all of these. And once I recognize the patterns and once I recognize the different smart contracts that I'm going to be interacting with regularly, it's really not that complicated.
Exactly. It's complicated, but like you said, it's a matter of just, taking it a methodical approach step by step and learning how to trace transactions through the Block Explorer. And once you learn to read Block Explorer, you start to gain more confidence. Even if you don't understand the protocol, if you can track and trace the transaction properly, you can gain an understanding of what's happening on chain.
And I mean, with a protocol Polygon or Binance Smart Chain, you can mess around a lot for. I mean, it's what's I know that Polygon's 1 cent per most complicated transaction. Binance Smart Chain is sometimes less than that. So you can with $5 to $10, you can get started, play around, mess around, not worry about losing the money because it's a small amount of money. So I think that's the best way to really get started. Just play around with it.
Absolutely. I agree. The way I got started was basically, back in 2016 as a crypto CPA, and I started with my personal portfolio. Then I had, friends and family reaching out to me, and then my skill level and confidence grew from there. I think it did help me that I had a background in financial accounting within the Big Four, so I was dealing with very large data sets that were unstructured, applying taxes to it, and dealing with due diligence that factors into that. But at the end of the day, it's key to, like you said, get your hands dirty, do some transactions yourself, and trace those through the Block Explorer. If you have a close acquaintance or friend that you could even track and trace some of their transactions, I think that is also a good exercise, because now you're getting that position where you're looking at transactions and wallets from someone else, and there's some nuances to that versus the transactions that you made too. So I agree. I think that's the best starting point, is just getting your hands dirty and learning how to read the block explorer and how to.
That's a slippery slope, though. You might have all your friends asking you to do their taxes if you start looking into their transaction history.
Yeah,
I have stuff with all my family. I'm doing like 4 or 5 crypto tax returns for free every year, and
I've had to cycle that out over the years. Trust me. That does become a problem after a while.
Hundreds of hours of work for free, you know.
Exactly.
Gotta love your family.
Over the years, I've slowly, got them to different places with different people. So trying to get some of that off of my plate, but it's not a bad place to start if you're looking to, run some wallets.
Absolutely.
Transactions. Now, this just came to mind. This is, I think, an interesting question. When I first started crypto accounting, and probably, when you first started as well, there was only a handful of subledgers and just accounting solutions out there. And now over, subsequently from that point, I would say over maybe the past even like 2 years or so, 2 to 3 years, we've seen that absolutely just proliferate. And I'm sure you're like me where this year you probably have demoed or used maybe 20, 30 different subledgers and accounting software. So where do you see that part of the market going? Because obviously right now it's very bifurcated. We've seen the start of, some acquisitions. I think maybe we saw one acquisition last year of one subledger purchasing out another with Gilded and Bitwave. Do you see that sort of, continuing, or how do you start to see that space develop? And are there any considerations with that when you're dealing with clients in terms of, just the continuity of their accounting systems, maintaining their data, and those types of considerations?
Yeah, so I've seen this with a couple of clients this year. I think that the bear market was tough for a lot of these subledgers because, for some of them it was a really good building time, and they had really good and quite stronger. Like that's now is stronger for having gone through that, and I think that I think that the interesting thing about subledgers is that so many of them have different kind of special sauces to where they serve a really unique kind of use case. And so I do think we'll see some consolidation there because I do think that there's a lot of subledgers that are out there, and I get contacted, because we run a community, I get contacted all the time by new ones that I have never heard of before, and I've also seen some that like I met with people a year ago that were just starting, and now they've built this really cool tool and stuff like that. So I think that we'll see some consolidation, but I do think that there's going to be like not one subledger to rule them all, because you have some tools that are really good at just, if someone's solely in Web3, they're really great for that, and they may even act as their whole ledger, right? And maybe they leverage AI and creating tools and rules. Everyone likes to throw around that they have AI integrated into their platforms, which is true in some cases, and an exaggeration in other cases.
That's a big push I see right now from a lot of them. They're starting to work on that.
Yeah, and I think that, but the different tools have different strengths, and some of them are really awesome for NFTs, and they'll show you like the value, the liquidation value that you could use for the NFTs. Some of them are really good for handling massive data sets and kind of streamlining the processes. So, I do think there's going to be consolidation because there's some that they're offering duplicate kind of use cases, but I don't want to see a monopoly in the subledger space, because I think that it's good to have competition there. Do I think they'll all survive? Absolutely not. But I do think that there's a lot of them do have their own unique special sauce that might be hard to identify from their initial advertising campaign, but it's apparent when you use their software.
Yeah, I agree with that. There definitely is some distinctions between them. Like you said, some are better with different types of assets, protocols. Some are better suited if you're dealing with a client that has extremely high volume. Some just overall, have more support for different blockchains. So really, when I'm looking at a client, I'm trying to first understand their company as it is now, where it's going in the future, the flow of their funds, what type of protocols are they on, what are they really using the blockchain for, and then helping them really get a short list down of like the top 2 to 3 to 4 ledgers that they can select from. And then from there, working with them, looking at the different offerings and price points, because there is, a lot of different options out there, and you just don't want to sort of blindly go to the first one if you're out there selecting a sub ledger. So yeah, I had a follow-up question on that and then I just lost it. Sorry. So when you're working like a new Web3 firm or a new Web3 company, to just follow up on this point, is there like a specific approach you take to helping them select a sub ledger? Is there sort of like certain criteria that you're looking at where you're going to say, I want to understand X, Y, Z, and then we may be looking at these options? Or do you find that most people are coming and they already have a sub ledger solution already decided, or like what's your overall approach to that?
In my experience, the people that what like the of these subledgers, because for some of them it was a really good building time, and they've had really good, and they've come out of it stronger. And I think that's the anyone that's existing now is stronger for having gone through that. And I think they've
working with them, looking at the different offerings and price points, because there is a lot of different options out there, and you just don't want to sort of blindly go to the first one if you're out there selecting a sub ledger. So yeah, I had a follow-up question on that and then I just lost it. Sorry. So when you're working like a new Web3 firm or a new Web3 company, to just follow up on this point, is there like a specific approach you take to helping them select a subledger? Is there sort of like certain criteria that you're looking at where you're going to say, I want to understand X, Y, Z, and then we may be looking at these options? Or do you find that most people are coming and they already have a subledger solution already decided? Or like, what's your overall approach to that?
In my experience, the people that, like the Web3 companies that I've worked with or the projects, they're often like very agile and they're fast and they're going really fast and they've built this thing, and accounting is oftentimes like the last thing that they're thinking about. And so very rarely
get forced into doing it usually.
Yeah. And I think it's more of a like, oh crap, we have to file our taxes. Like, let's get this done now. And a lot of, at least this was my experience at TrustSwap. Like, we would the team would decide to go in a direction, and just like I would have to put out the fires that created with from an accounting perspective. Like we would, I would be the last person to know that we moved liquidity to. I mean, not the last person to know, but like the last
should be the first.
Should be the first.
Yeah.
And I'd find out that we were now on Avalanche, for example, and so now I've got to figure out a tool back in 2021 that has support for Avalanche, and make sure that I was, to be honest, I was in Excel at that point, because when we first started, there wasn't. I was using Gilded a little bit, but they didn't have the functionality for all the chains that I needed to use. So I was like, I'm not going to do a hodgepodge of like half of this and half of that. So I would actually use their downloads and get like exports and move that into Excel. So, but for as far, I do an interview process to see, as you say, like what chains they're on, what chains they expect to be on. Do they have a lot of NFTs? If they're heavy on NFTs, there's certain subledgers that handle that a lot better, and certain that they don't necessarily focus on that, which is fine. You don't have to have a product that suits everyone. You have to have a product that suits certain people really well, and that exists. So I think that for me, it's an interview process with the client to figure out what are they looking to do, what do they want to get out of it, what type of do they want real-time analytics, or are they looking to just classify things properly? So there's tools that have really good dashboards and stuff like that, and some clients aren't concerned about that. Other clients,
same thing with integrations too. Some
exactly.
Some are.
Yeah. So if you're using Web3 payroll and you need that to integrate, or if you're stuff like that, or there's a lot of different complexities to it, and I have different recommendations for different tools based on the scenario for that.
Yep, I take the same approach. It's just a fluid space. It's extremely bifurcated, so you really want to take it on a case-by-case basis with each client. So when you're training, switching gears a little bit, when you're training CPAs and CFOs, are there any common sort of misconceptions or myths that you see over and over again when you're talking to these types of people?
I mean, a lot of the tropes that you hear about the industry as a whole, like it's a hotbed for money laundering and stuff like that. And I laugh at the money laundering thing, because it's like it's actually kind of stupid to be doing money laundering on chain, because it's all public, and I think that's the first learning experience that I give to people. Is it's like you think of, or people historically think of Bitcoin as like this like anonymous blockchain, but it's public. It's everything is there, and so you have these on-chain analytics firms that are tackling these issues and identifying people on chain with great accuracy. So I think that obviously there's a level of doubt that they have to overcome, but I think for CPA firms, it's understanding that this is a ledger. It's a tool. It's an accounting tool, and so the quicker you understand that, the easier it is to see the implications of it and to see the value that it holds. So it's understanding that, and it's understanding, I think that, it's a necessity for the firms to start to grasp this stuff, because it's not going away. If you haven't been paying attention, like every 4 years we have a cycle, and every 4 years the cycle, the lows get low, the lows get higher, and the highs get higher. So it's an industry that's getting regulated. The ETFs are approved now. I think the writing's on the wall, and I think it's like, do you want to be chasing after a trend, or do you want to be getting ahead of it? And I think that I also use the cannabis industry as a really good example of this. It's a much smaller scale, but a lot of people made a lot of money doing accounting services for cannabis before it was the hot thing to do, right? And when you can specialize like that, you can really, carve out a niche as you have done really successfully in the crypto space as well. You can make a lot of money because it's expensive problems that you're solving for people. A lot of
It's
times.
expensive problems, and there's not a lot of solutions because there's just not a lot of people to do it. So, taking this base level skill set that we've developed as CPAs and accounting and tax professionals, and then adding a whole nother layer of expertise onto that only a small percentage of the population has, that combination of skill set can lead to something very valuable to any, CPA or CFO that's out there listening. So it's really just stacking those skill sets on top of each other. And then all of a sudden you have yourself a niche like we sort of find ourselves in here today. Totally. So, one thing that I think we're both on top of to a very large degree is sort of the pace at which this regulatory environment is changing, and it's very quick. So where do you see regulations moving in this digital asset space, specifically related to taxes and accounting over the next couple of years? Are there any things that are sort of top of mind for you that you're preparing either your clients for or just professionals in the crypto CFOs? Are there specific regulatory items that you're keeping an eye on that are sort of top of mind for you?
Well, FASB was a big one. So we got the update on there for fair value accounting. I think that was the right move. We had a whole response coalition to that in the community to kind of develop as a community kind of what we think the best sort of path forward for that was. And we submitted that for the comment period for that. So I'm happy that kind of turned out the way it did. I think that we might see some kind of like hardline regulatory rollouts here. We saw the broker regs that were proposed, and me personally, I think that would be basically cutting out the U.S. citizens' ability to participate in DeFi effectively, because you would make it impossible.
We're going to get gated.
Yeah, we're going to get geo-gated to the point where if you're coming from a US VPN, you just won't be able to access certain sites, and I think that that's a shame because we don't want to fall behind on another industry just due to a lack of understanding really from leadership, I think is the biggest problem here. So I think we may in the short term see some kind of like hardline regulations come out just from a misunderstanding or like a propaganda standpoint of people just looking for, to attach themselves to some sort of, like comment line for the election cycle, right? But I do think that, as people gain more understanding and more clarity on the industry, like just the general public, and we see more adoption, I think that those regulations will come in more in line with what they need to be. So unfortunately, I think it's going to be kind of like we're going to go on one extreme, and then I think we'll come back more to something that's reasonable. But I do think that process is going to be a little bit painful there for the U.S. and I think it's going to be a part of the reason why you're not seeing the U.S. in discussion. When you see these conferences that are global for the crypto and the crypto industry, you're seeing the U.S. becoming less and less of a focal point in those discussions because we're not leading the way like we should be. And I think that freedom and liberty. I wouldn't consider myself like a libertarian or really any kind of like full on political party, but I think that democratizing finance and having that be not controlled by banks and stuff like that, I think that it's a really important thing for freedom globally and economic security, because we can't just have money printers that are just constantly going. And I think that so I guess to get back to your question about where I see the regulatory framework going and how I'm advising CPAs, we got the news that the 8300s won't be, crypto won't come under that umbrella until they come up with their new regulations surrounding that. So that was good news because there was a lot of uncertainty around that. And we actually, I think we in the crypto CFOs community, one of my business partners got some insights from the IRS, so from a revenue officer there, and we shared that they weren't going to be really requiring that stuff until at least January 1st of 2025. And we asked her for permission to post that, and actually got her in trouble for leaking that information ahead of but ultimately, I think that staying on top of things, common sense, and what you said before is key. Document the process, right? Because if you don't have clarity from a regulatory perspective, document how you're doing things and why you're doing things, and kind of align that with some sort of regulation that justifies your point of view. Because ultimately, if you have a defensible stance and there's not clarity, no one can really charge you for something if you can't really get a slap on the wrist if there aren't clear rules.
Absolutely, especially if you contemporaneously documented it and you have a reasoning behind it and you're able to support that with tax evidence. I think, that is paramount. Now, obviously that goes overlooked a lot. Now, one of the big things with regulations, I think everything's going to hinge on the future, is sort of like this friction between the industry and regulators wanting different forms of KYC. We see that with Form 8300. We see that with the proposed broker regulations. We see that even with issues related to DAOs and the fact that they need to start organizing their entities. We even see that with, emerging sales tax issues. So there's going to have to, like you said, I think the regulators are starting with they're coming from a very hard negotiation standpoint, like with the broker regs, where they're just basically we're KYCing everything. And there's going to have to be some sort of middle ground. I think it's just going to be really interesting to see where that all lands and how we can sort of, find some middle ground between, completely permissionless, non-KYC on-chain interactions and compliant with regulators. Like right now, there's sort of no bridge between the two, and there sort of has to be something.
Yeah, I think that something that has made things interesting for me, and I don't know how this can be applied exactly in practice, but I think that governments are eventually going to roll out digital IDs. But if you had on-chain IDs that were zero knowledge based, so we've got ZKs that are advancing in the space where you can have a digital ID that the government may not need to know, or the DEX may not need to know exactly who you are. But if you have a digital ID that says that you're from the US, maybe they need to KYC you, or then they need additional information where it's not exposing everyone, or it's not requiring you to geogate, but now you know that, okay, this person is from a country that requires these sort of things. So I don't know. I'm not proposing that as a solution, but I think
there's going to have to be some form of that in the future. I think some sort of zero knowledge. But even one thing that I saw with the proposed broker regs, there was a lot of commentary on it. I know the CryptoCFOs gave commentary on it. I read over that. There were so many, I couldn't read them all, but I was trying to read some of the more ones I thought would be interesting. And one was from the New York State CPA Society, and one of their recommendations was to basically create some sort of on-chain identity, like a digital ID in the form of an NFT that'll basically be able to take all the transaction data, send it back to a qualified intermediary, and have that intermediary handle a lot of the tax reporting. So they were actually trying to find a way to tax all of the on-chain transactions through some form of digital ID that goes back to a qualified intermediary, similar to how you would do like a 1031 real estate transaction. So there's definitely some considerations around that, even though they're still early stages, but I'm interested to see, where that goes in the future.
Yeah, I mean, digital IDs, they scare me a little bit, but I think if they're done in a decentralized way, I think that, that's the only way that I kind of feel comfortable with, as long as they're not I feel like if there was some sort of decentralized on-chain, zero knowledge type of thing where you could have an ID that represents your online identity, but also doesn't expose your identity to anyone who doesn't need to know who you are. Maybe they can tell specific details that are known to be true about you based on your identity documents without revealing everything to you, or revealing everything to a third party. I think that, CBDCs, digital IDs, they're kind of scary, and it's a lot of the reason why I'm in the industry. And so finding solutions where you can protect privacy while also maintaining some sort of regulatory, it's a tricky thing, because as we talked about, the industry moves at such a pace that, the industry is 4 years ahead of where they're ready to finally regulate stuff.
Exactly.
So it's
and then we're going to have another cycle now, and Each cycle begets new protocols, new asset types, new ways of doing business.
Explain proto-dank sharding to someone in Congress, right? Like, imagine trying to explain that. I don't even fully grasp it. I know that it's going to increase scalability on the ETH network, but like, how do you break that down for someone who barely knows how to use Facebook? It's like.
Yeah, so there's just a huge there's a huge gap, and the gap is ever growing. So that's why it's important for tax professionals, CPAs, and CFOs to be part of different learning hubs and communities where they can take this knowledge in. That's where the crypto CFOs come into play. Are there, beyond technical skills, are there any sort of personal qualities or attributes that you think make someone better suited to thrive in this digital asset space as a CPA, as a tax professional, as a CFO?
I think absolutely. Me personally, I was kind of like, I got into accounting originally because I was like, okay, it'll help me access. It's the foundation of businesses. So yeah. I didn't really know what I wanted to do, but I knew I wanted, I wanted to have options. And so I got into accounting by the advice of my uncle, who was an accountant, and then went on to be a real estate developer. Maybe I want to work for a company like, I wanted to be the CFO of Patagonia when I first started in college. And I was like, I want to work with cool brands, and I can do that by being an accountant, right?
You're an outdoors guy.
Yeah. But then, as I got into the career, I needed the stimulation. So that's why I originally found cannabis, because it was like, oh, okay, there's cool. I like the industry. And then also there's these kind of cool things to be learning. But after you get past, one or two tax code items in cannabis, there's not really much else to learn. And so I think you need to have an appetite for learning, and you need to be genuinely interested in the space and have a passion for what the space is doing by democratizing finance a little bit and making, I guess, money more equitable. I think that, the inflation is theft, I think, and I think that systems that protect your money in the long term and its purchasing power are really important. So, getting back to your question, I think that you need to have a desire to learn and that kind of academic curiosity, because you can't stop learning in this space. If you stop learning, you're going to fall behind. And it's exciting to be a part of an industry like that.
Yeah, I agree with you. A passion for learning is key, because if you're in the crypto space, it's really never going to stop. Because just like we said, each cycle brings sort of new innovations, and those innovations are in the form of new blockchains, new assets, new protocols, or just overall new ways of doing business. And you're going to have to learn those, and then learn how to apply accounting and tax treatments to them. Mm-hmm. So you're constantly going to be learning. And on top of that, there's going to be new regulations coming out. So you're going to have to also understand these new regulations. So, I know that's what you're doing at the CFOs. You're helping build a community where, when we see the proposed broker regs come out, we see Form 8300 come out, there's a resource for people there to start learning about these things. Similarly, on emerging tax issues, I know I've done some presentations in your community as well, mm-hmm. on some emerging tax issues like DAOs, like NFT sales taxes. These are going to be some of the up and coming things that you're going to just have to be continuously learning best practices, mm-hmm. and helping apply them to your clients. So I think that's key. And I think it's great with what you and your team are doing over at the Crypto CFOs. So to wrap things up, can you let us know, where is the best place for people to both get in contact with you if they want to speak with you individually, as well as if they want to get involved in the community of the Crypto CFOs, which I am involved with, I presented in, I'm a member of, so I encourage people to reach out. So can you give us some information there?
Yeah. Connect with me on LinkedIn. I love connecting with people there. You can also email me, Taylor@CryptoCFOs.com, if you have any questions about the community or anything like that. Good place to kind of get kicked off is we're launching CTAC, which you're going to be presenting at as well, on DAOs, I believe. Your DAOs and kind
doing one on DAOs and one's on sales taxes. So you got me busy.
That's great. All the kind of niche stuff. I love it.
Yep.
I think that that's a really great resource, especially for accounting and tax professionals, because we're going to be offering over 20 hours of CPE during the course of that week, the week of February 19th. So I know the 19th is a holiday, but we're going to be running it the whole week. So if you can catch one or more, I think there's a lot of value there. And members of the community get into that for free. So people can check out CryptoCFOs.com. We also have we're building a tax practice in public where we do crypto tax resolution work. So if people have any clients or know of anyone who needs help, they got a letter from the IRS and they have a large tax bill. We don't do crypto taxes. We just do crypto tax resolution. So we do the reconciliation. We talk to the IRS for you. So if you know of anyone that needs that help, we're doing that as well.
Awesome. So reach out to Taylor and his team and get in contact with him. Taylor, I appreciate you joining the Financial Frontier today. Great information. And I appreciate everybody watching as well. I hope you guys gained some value from this. Until next time, I'm Patrick Camuso, signing off.